Hi, it's Rick. So this video is going to be a lot more granular than I've ever done before. So hopefully it will be of use to some of you. Now, if you're kind of investor that doesn't want to look at the charts, or maybe once a week is good enough, then you can tune out. Though there is some education in here, but uh, this is not necessarily for you. But the people that have maybe 5 minutes a day, at the end of the day, to look at the market, see what's going on. That's about all you need. Even if you have 3, 4 positions, about 5 minutes to manage them each night is about all that's needed. So with that, let's try and get this thing started. So I pulled up a daily chart here of Salesforce, and this goes back into March of this year. And I'm going to assume that this got on my radar because yesterday this stock hit set a new 52-week high. And so let's say I have a screen or a scan that looks for new 52-week highs. So this would now come on my radar. Doesn't mean it's actionable, but at least it now comes up on my radar screen. So Salesforce, the first thing I do is look at the fundamentals. It's a $200 billion company by market cap. Earnings last quarter grew 100% over the previous quarter, and sales grew by 14%. And the previous quarter before that was 10% earnings growth, 14% sales growth. So doesn't really meet my 2 consecutive quarters of more than 25% earnings growth. But the fact that it turned in 100% last quarter got my attention. And I guess it obviously got the market's attention because here's what happened. It gapped up big. So it gapped up, drifted on back down, and then found some support right here, coincidentally, with the 21-day moving average. So here we are today, or yesterday, and then today just mushed around near the top. So just keeping an eye on it. So the next day at market close, well, just fast forward, and it went up a little bit more. Okay, not viable. No pattern there. I wouldn't be rushing in. Okay, it's pulling back. The other thing I would do here is I would now draw a line across here, which is now a new 52-week high. So that green line now tells me this is a 52-week high. So you can expect some resistance around that level. So we just watch it for a couple more days. So it's drifting back down, drifting back down. It's getting a little more interesting. If it takes out this high, odds are pretty good that this 21-day moving average will be the low. So you could have an entry above this, or the stop below here. But that bar seemed a little wild to me, so I'm going to wait another day, see what happens. Oh, sure enough. Okay, and it tightened up a little bit. So this one now, on this evening, I'd be making a plan perhaps for the next morning. So if I look at this particular bar, I see down here, I have the data for each individual day. So this day, it went to a high of 192.55 and a low of 189.28. So I would be interested in buying this above yesterday, let's say today's high, 192.55. So we're going to assume an entry at 192.65, give a little bit of room. And where will we put our stop? Well, we put our stop underneath the low of today, which is 189.28. So let's say 189.25. And so we would be risking, what's the math on that, $3.40. And in percentage terms, that's about 1.8%. So that meets my criteria. So so far it's looking good. So how many shares can I buy? So let's assume I have a $100,000 account, and I normally would have 4 positions at $25,000 each. This kind of a setup, and the fact it's the first pullback from hitting a 52-week high, the probabilities are not super in our favor. So I would only take a quarter of a position. So $12,500 would be my position size. So you just do simple math, take $12,500, divide it by my proposed entry price of $192.65, and it tells me I should have an order ready to go for 65 shares. So I would place a buy stop order for the next morning for 65 shares at $192.65. And if the next morning I get an alert on my phone, or if I'm watching it on the screen, I would immediately place a stop loss order for my 65 shares at $189.25. So I have all of this actually. I record these on I've got a worksheet for every trade that I take. It has all of these things on there. What symbol, the size, the price, where's my stop, how much I'm risking per share, what's my total risk in dollars, and so on and so forth. So in this case, we'd be buying 65 shares. We're risking $3.40. That's a $221 risk. Now, the other thing I do is I quickly calculate what I call my reward ratios. So at what price do I get 1 for 1? In other words, $1 reward for the risk I'm taking. And that would be 196.05. So that means it's got to come up to here. Okay, that's quite reasonable. To get 2 to 1, I want a minimum 2 to 1. It's got to come to 199.45. So that's right near the top. So I probably would not take this trade because I'm looking for usually 3 to 1 risk to reward. But let's say I'm getting a little more aggressive. The market is really good. I'm willing to go for 2 to 1 because it could just easily blast past this new high. So that's my plan for tomorrow morning. So, and that's about all the time it really takes to do this, is to build this out. So let's, the next day's finished. Oh, okay, we never got triggered, obviously. It never went above. But so now we got to do a new set of math because I'm still interested in this. If it goes down one more day, I'm no longer interested. So this is now 1, 2, 3, the 4th day down. That's the maximum I want to see. This has got to, rubber's got to meet the pavement, and this has got to go back up right here, right now, or it's off my radar. So again, I do a new calculation. Now my entry point is down here at 190.46. So we'll say 190.50. My stop is I'm going to say 187.25, 6 cents below today's low. My risk is now $3.25. The same number of shares, 65 shares. So the overall risk is still around $215. So basically the same math. The difference being, if this gets 3 to 1, that's $200.25. So now this one makes more sense because if it does indeed get back up here, I'm getting 3 to 1 instead of 2 to 1. And over time, that makes a huge, huge difference. So again, I place my buy stop order. And if I get an alert, we'll put my stop underneath this low at 187.20. So that's all there is to do that night. So let's see what happened the next day. Oh, we're in. We got triggered. Went above my buy stop order and didn't trigger the stop. So we're now in this position. So nothing to do really. We're just sitting. As long as it's behaving, we have nothing to do. So another day goes by and it's going up nicely. It's now up to 194.65. So now, according to my cheat sheet here, I'm beyond 1 to 1. In other words, I was risking $215, and now theoretically I'm up more than $215. Now, the old me would have immediately raised my stop and the entire position to break even at this point. But I've studied hundreds of trades and I found that's a little chicken shit. And so what I now do is I keep my stop on half the position at my original stop, and I raise half my stop to my break-even point. So you got 65 shares. I would take 33 shares, put it at a stop or break even, 32 shares, leave it alone at the original stop price. So again, that might take a couple of minutes to place those orders with your broker, and you're done for the day. Next day, okay, we didn't take out a stop, and we're still marginally going up. Nothing to do. Oh, now we're getting good. Now we're at 198.50. So 2 to 1 was my number for 2 to 1 was $197. So now I'm up 2 to 1. So now my math rules at least say I'm not going to let this stock or this trade lose me money. So my stop will now go to break even on the entire position. So if it drops back down to $190.50, worst I'm going to do is break even. So I lose $5 in commissions. So that's, you have one more order to amend with your broker, but that takes just 2 seconds. Fast forward another day, ooh, we're now up to, we actually hit over 200. Went to $200.12. So now we're at 3 to 1, or we hit almost 3 to 1. So here's where like selling is really hard when you're in a winning position as to what to do, and to each their own. We all have different risk tolerances. Again, the old me would probably be taking a third of this position off at 3 to 1 or very close to it. And then I definitely am free rolling. I'm guaranteed a profit, albeit it's fairly small. And I'm free rolling the other 2/3 of this trade. But that's a personal kind of thing you'll get a feel for it over time. So there's not much to do now. We look, okay, nothing happened here. Didn't go past that magical high point here. So we're hoping that's going to break through that. Yeah, no, it didn't do anything, but it hasn't triggered a stop, so no reason for concern. I love the way this is getting tight. Now, if this breaks out over, what's this number here, $200.12, say I got to $200.20, I would be really tempted to add to my original position and make this a full position. So I would have a buy stop order in for the next day at $200.20. And you could comfortably put your stop loss underneath this day's low here, which is 195.73. So you're risking roughly $5, which is about 2.5%. Totally, it's aggressive, but that's kind of the way I like to play. So we got that order in. We'll see what happens. Nope, never got filled. In fact, it went the other way. So cancel that order. But we're still not stopped out yet. Oh, crap. Now we're close to, what was the low for this day? 190.63. So it came within 13 cents of our original purchase price. So we're not out of it, but we're expect to tomorrow morning. Ooh, we got saved. The low was 190.57. So we're safe by 7 cents. This does not happen very often, trust me. I invariably get stopped out. And then we come back up again. Okay, so that order that I was placed a few days ago for $200.20, I would put back in with the same parameters. Buy it here at $200.20 and stop it here at just under 195. No, nothing happens. Okay, cancel that order. This is just not behaving. Still having a tough time getting through that $200 number. So there's clearly somebody, the demand just is not going to chase it beyond 200, or there's a big seller up there that says, no, sell everything, every bid that comes. Then we come back down, and now it's the low of this day, 190.76. So we still haven't hit our stop. Wow. Next day, rips back up again. Now, when I put the order back in, if it goes above this, this move has happened in 2 days, 1 day really. I like to see things tighten up a little bit, so the chicken in me would say probably not. It would have got triggered, and I'd be kicking myself. However, I still have my original position, and yeehaw. Oops. So now what do we do with our original stop? We still have our original stop down here. I'm assuming that I would have taken a third off, so we're sitting on 2/3 of the position. You know, it's a personal decision. I would just let it ride. And we hang in here. Oh, we're back up again. So there's nothing, you can just do this. This takes you a couple of minutes each evening to have a look at it and say, okay, it's performing normally. Nothing out of whack here. No change to my plan. Wow. Okay, now we got a nice move. Now we're up. We're a high of 209. Haven't done the math on that. We're close. We're over 5-1. I would be personally, again, it depends on your risk tolerance, but I would be raising a stop on a half of my remaining position somewhere underneath here, and my original stop at break even, where my entry was. But that's just me. But you'll find your own comfort zone for where to put your stops when things are running. Well, didn't get stopped out. So now I'm going to assume my stop is going to be below here at 204, below this previous 2 days low. And we're still in. We're still in. We're still in. It's a low on that, 205.42. So we're still in. We're still in. Nothing to do. Nothing to do. Holy moly. Now we're up 10%. No, what did we buy? 190. So we're up 20, more than 15% on this trade so far. Oh crap. Okay, so now if you hadn't sold any along the way, I'd be getting out now. Certainly if it goes below 205, I'd be exiting this trade. And lamenting the fact that we didn't, well, we're hanging in. We're hanging in there. Still hanging in. Okay, we're stopped out. Now there's nothing, we watch this, because maybe it'll set up again. So, but until this really sets up a good pattern, this is about how much attention I would be paying to it each evening. Not much. What I like now is what's happening is these ranges, see these ranges here are pretty wide. Now it's tightening up, and it's tightening up again. This is a good sign. A little looser, still tight. Getting a little looser. Now you could draw a trend line connecting this high down through here and say, where's that close? That closes there. So if this gets above 214, I might be interested, but I'm going to watch it for another day or two. Okay. Now I'm saying if it gets above, yeah, still same number, a high of 212.65, because then you can put a stop down here at even all the way down here at 204. But there's a decent risk reward. I won't go into all of the math on this one, but yeah, it would be in this one at over the high of this day. It closed, you're slightly negative. Well, in fact, this, okay, now I remember, this is actually when I did enter this thing. So I extend this line here. I think that's what happened. and I got in at 212.69 or something like that. I can't remember where's my sheet. So that was an aggressive entry, and my stop was down here at 204. Now what do we do? Oh, this day, okay, crap. Underwater here, but I haven't hit my stop, so I'm not too panicked. Stop still holding, still fairly tight. If you missed this trade the first time, it's setting up to be entered again, perhaps. Oh, too late. It gapped up. Can't do anything about that. You can't, if you hadn't bought it, you can't buy it on the gap up. It's just, it's gone. Fortunately, I'm in it. And so now I'm just managing this day by day and loving this. Not so much that, but yeah, we're holding water here. So again, this is setting up a potential new entry right there. I don't know what the math is here. Distance between this one and the bottom of that is about 3%, 2.3%. So that's within the zone. So you could enter, you put an order to buy at above 230, and your stop would be at 225. So $5 worth of risk. And you place that stop for tomorrow morning. Oh, hopefully it was a stop limit order, and you would not have gotten filled because it gapped right through all of that, which as an owner back here, I'm very happy to see, but if you weren't in this thing, you'd missed a chance. Nope, and that's the end of it. So that's, hopefully this makes some sense. I'll run through one more at the risk of boring you guys too much here. Some of you more active traders may find this useful. Let's just take this one and roll it back. So this one is really sloppy. Let's say we're starting to watch this in June. I don't know what happened here, wedged up. This would be over here is the 52-week high. Actually, it's an all-time high, which then had to get moved because it got taken out here, but didn't last very long above the new high, and it came down and then stalled and then broke right through again. So this has got my attention, but we missed it. I would not have bought it. This pattern just doesn't suit my eye. There's the range from here to here is just way too wide. Managing risk is difficult. Even when each one of these bars is like just one bar, it's 3% in one day. So, but it's on my radar. I'm keeping an eye on it. And sure enough, it comes back to that 52-week high and then now crashes through it again. So this is getting really less interesting, but you know, we keep it on the radar. Is again, if you look at the fundamentals of this company, its earnings are unbelievable, growing 79%, 76%, 65%. Revenue is growing 33%, 33%, 32%. Market cap of 61 billion, so it's a decent sized company. So see, these bars are getting like they're just too big, but it's worthy of keeping on the radar because maybe it'll tighten up. No, we missed it, but didn't miss anything really. Now this is interesting. So now we draw this new high and we move this line up here. That's now the new high. It's hard to draw a downtrend line here, so this is really sloppy. Oh, I must have still liked it though, because I did buy it when it came through this downtrend line here. Oh, I remember this now. Why I entered is because I got a really tight stop. The distance from here to here was like My entry was here. Yeah, it was like 2.6%. And then I got lucky. And then it took out the new high, stalled there though, but kept on going. Usually you'd expect this to retrace, and it didn't. It just kept on going. Then it pulled back. And then it pulled back, but really tight, really tight. So if I'd be looking at adding to this position over 74.80 and a stop under 73.50. So like super, super small stop. So high reward, low risk kind of trade. When I say low risk, it means you're risking a tiny amount for a quarter size position. And then it went all the way down to here. So that went off my radar. I'm not interested now. Having said that, once it took out this high, I did buy it. And yeah, it's performing decently. No reason to sell this thing. Okay, this was not a great example because this was not a super entry right in here, nor was this one. I obviously was looking at a shorter time frame chart, but I think hopefully you get the idea that what I'm looking for is these moves to a new high, a gentle pullback, a tightening. My first entry, not for a full position, is the beginning of, if you want to call this a cup and handle pattern. So you've got, here's the cup, here's the handle, and then here's the resumption. So this is what Minervini refers to as a cheat entry. It's part way up the cup. And then it gives you a second entry when it comes out of the handle. And then the third entry when it takes out this high here. I have enough of this position that I didn't do that, but so you can get that kind of analysis from any charting book or whatever. But if you do any amount of reading, the most popular pattern is what's called a cup and handle. So round base like this, flattening, or gentle pullback, and then a rip up. Okay, way too much for 95% of my group, but there's 2, 3, or 4 of you that I know are into daily charting and daily trading. So hopefully this will help you. Cheers, everyone.